Hello and welcome to the latest edition of Talking Boards, the 29th of July. We are Signal Centre. I'm Joe, joined by Steve and Jamie. Good morning, gentlemen.
Good morning.
Morning.
How you both doing?
Yeah, very well, thanks. Friday. Can't believe it's gone so quick this week.
Friday, end of the month. It's all happening.
Yeah, it's flown
Yeah.
by.
Yeah, very interesting markets at the minute, which is good for us all, considering it's pretty much summer holidays now. Typically, markets can be a little bit boring around that time of the year, but not at the moment, which is good. So let's get stuck into the latest headlines and see what it is that's moving these markets at the moment, and then we can get stuck into some price charts. So starting off with the Eurozone, and the vulnerability continues. The industrial sentiment number dipped to 3.5 for July from a number of 7 previously, while the services sector index retreated to 10.7 from 14.1 in June. Consumer confidence was also confirmed as weaker on the month, with the overall business and consumer survey sliding to 99 from 103.5, both of which were below expectations. We also had the GDP number out from the US yesterday, and if you get 2 consecutive negative readings of GDP, that puts you into a technical recession, and that's what we saw yesterday from the US. According to the flash data, the second quarter annualized GDP data was at minus 0.9, compared with expectations of 0.5.
What
And
positive
the
0.5
Yeah,
it was
positive
expected.
0.5. So a
Wow.
much worse number than expected. There was a small increase in consumer spending for the quarter, despite a dip in the spending of durable goods. GDP was undermined by another sharp dip in inventories, while net exports did secure a net advance. So technically, the US economy was therefore in recession for the first half of the year, although the data will inevitably be revised. The US yields declined again yesterday following the GDP data. Market expectations over a possible 75 basis point hike again in September continue to fade, and yields moved lower across the curve. The 10-year yield declined to a 3-month low below 2.7%, with a retreat to nearly 2.6%. 2.65% early this morning. The dollar continues to dip as well. The correction there really picking up a bit of steam, as we'll come on to in a moment. The dollar did rally into the New York Open, and lower yields were a significant factor in undermining the dollar after the US GDP data. Gains in equities also undermined defensive support for the US currency, with the dollar index retreating to fresh 3-week lows. We did see equities rally. Wall Street indices further advances yesterday after the GDP number. Hopes really that there would be a less aggressive Federal Reserve stance on interest rates. As we mentioned, 75 basis points was being touted for September. It now feels as though we're going to see a lesser number than that, if at all, based on the fact that the GDP number was so weak. So in this instance, bad news is good news, it would seem, for the markets. Also, as we touched upon, it's the end of the month, and therefore what you can see is some pretty choppy price action, as there's a bit of positioning going on from various funds and asset managers to try and make their gains or losses not look as bad, or make their gains look better. So we could see a little bit of jiggling around in the markets today.
Creative financing, I think it's called, Joe.
Correct, yes. Okay, so let's get into the chart. Steve, do you want to kick us off with our friend Bitcoin?
Yeah, sure. Yeah, and quite an interesting move over the last hour actually in Bitcoin, but we'll come to that in a second. We've got a technical bounce. I love the way they say technical recession. It either is or it isn't. And as I suppose you're saying, like, they might have put a revision in there, but we all know it is. Let's stop messing about, shall we? Anyway, yesterday's trade or price action in Bitcoin was very positive. We did make it all the way up today, actually, in fact, to this resistance we highlighted yesterday at 24,280, where we highlighted it a few days ago. But yeah, that's in this corrective channel, looking very positive. Nice morning start formation on the candlestick chart has assisted with this upward move. That's a good signal on a technical basis. On the 4-hour chart, we have broken up as well, broken above the Ichimoku cloud, and we can see this resistance level that we highlighted on the daily chart and breaking above it. However, in the last hour, we have seen a bit of a turnaround, and that looks a little bit ominous. If you look back here, we've got this evening doji star or evening doji formation, and that signaled a top. We've seen a shooting star in the last hour, so that might be my gun to head trade idea. That seems like an obvious and excellent chance to sort of like get back into being hated by the Bitcoin investors for me today. Anyway, jump across to gold. Gold continued the move higher. We've seen this extension move higher really aggressively. Well, it could be a third day today if it continues in the manner it started. Nice bullish outside candle that we saw on Wednesday. Thursday's price action took us through the 21-day moving average, and as we said yesterday, even a sort of like a normal correction would be like a 38.2% fib retracement. That's all the way up at 1830. So it seemed like a long way to go yesterday. We were $90 lower than that. So we're a little bit closer to that now. So and it's really not looking like slowing down anytime soon. On the 4-hour chart, we highlighted this inverse head and shoulders, also this trend line lower, which we've broken through in the last 8 hours. So again, positive looking sentiment in gold for prices, and I think that's going to continue. There's no real signs of it slowing down yet. Next resistance we've got is at 1787. That was a previous swing low on the support level on the way down. That'll turn into resistance. The obvious level of $1,800, which would be a psychological level, and above that we've got the, as I say, the 38.2 fib retracement level at 1830. Gold on that. Silver, I see silver is like, I should start to analyze silver a little bit more, but we haven't really got a lot of time in the mornings to do this. But again, this has turned around really nicely on a weekly chart. This is a morning doji morning doji formation, but it's a really, really strong candle we've seen on silver. We've seen a rally of from the swing low, getting up to 11.5%. Really nice rally on silver. It's becoming a much more popular asset to trade than it previously was. We've broken through a previous support level all the way back in July. We're now back above that now. So that would have been a little bit of resistance, but it didn't really act as any resistance whatsoever. We're above the 21-day moving average. We're heading up towards this previous swing low, which will provide a little bit of resistance, but that's at $20.50. But yeah, again, really nice move higher. It's even a better move higher than the gold that we're seeing. Not in terms of percentage, I don't think. Well, yeah, probably in terms of percentage, but in terms of number of days we're rallying. Oil has tripped me up again yesterday. I'm getting a bit annoyed with this potential rally that it seems to be building up towards. Inverse head and shoulders on oil. I'm still positive on it. I will remain positive on it until we really get a break of the $88 level, or even the $92 level would sort of like make me a little bit nervous about the potential for this move higher to continue. The 21-day moving average seemed to put a cap on price action yesterday, and it reversed sharply in the afternoon. I was looking quite good in the gun to head trade idea. We'll go through that in a second after the FX and stock analysis.
Lovely, thank you, Steve. Okay, so onto FX, and it very much is all about the US dollar. Really big move lower underway. So we failed at the resistance at 108.74. We've taken out the trend channel we've got in place there, and more importantly, we're taking out this 105.78 level, which was this previous swing high from June. So obviously a long way to go on the session today, but the initial signs are that we may be about to see a breakdown here, and we will move into really full corrective mode, I think, and we could be looking for prices to head down towards this 38.2% fib level, which is at 101.74. Obviously, there will be a couple of support levels in and around this channel along the way, but for me, it looks like the dollar is on the back foot and we are going to continue to see lower prices. And of course, that's having an impact on other currencies that have been pretty swallowed up by the strength in the dollar of late. So let's take a look at Euro USD. As we can see, yesterday we got a bit of a doji, but prices more sort of weighted towards the upper end of the daily range. We're on the front foot today, up by 0.4%. Now looking for this to target this resistance above at 103.40. Once it gets there, it's obviously got a pretty tough job to try and break through that and also take out this downtrend resistance that we've got in place as well. So it looks as though we're going to get that maybe happen over the next couple of weeks or so. Maybe even sooner. We'll have to wait and see, but certainly looks like it is moving higher in the very short term. If we take a look at Aussie versus the US dollar, we can see a really nice breakout of the downtrend here. A couple of days ago, we posted the close above that level. Yesterday, a bit of indecision, but today we're looking to follow through to the upside on that. So potentially a bit of relief there for the Aussie dollar versus the US dollar. If we take a look at cable, really nice breakout from this triangle eventually. I mean, there was a few signs down here, a lot of dojis, but then finally we saw things start to get a bit more interesting on the upside following the strong move higher on the 27th. Yesterday we posted gains and we're posting further gains today. So it looks as though we are on the front foot there and starting to head up towards potentially resistance as high as 126.66. So on the front foot there very much. If we take a look at New Zealand dollar, US dollar, similar sort of thing to what we saw with Aussie, broken the trend. Actually, in this instance, from a technical perspective, a little bit cleaner. We saw a nice pullback to retest the broken trend line before then prices continue to move to the upside. So that's looking pretty robust as well this morning. Dollar CAD, quite interesting, breaking down through the support at 128.19. It looks as though we're going to see prices continue to move within this longer term range. But from here down to the lower end of the range, probably some decent risk reward on offer there for anybody looking at selling dollar versus the Canadian dollar. Dollar Swiss, really sharp move to the downside, approaching a massive level of support here. So it'll be interesting to see what sort of reaction we get. On the previous attempt at this level back in the end of June, it actually sparked a really nice move to the upside. So we'll have to wait and see if we've got the same sort of buying interest once again once we reach this level. So that's between sort of 94.72 to 94.95. Yen, we've seen a decent amount of strength in this lately, given that it's been pretty horrible to watch for a number of months. But this is dollar yen. So obviously we've seen the combination of dollar weakness, but also coupled with a bit of yen strength. So we've broken below support here at 135.56, which for me forms a short-term top. Really quite impressive follow through this morning. So it looks as though we may see a continuation lower there. In terms of levels to watch on the downside, I'd highlight these two swing highs here and this swing low here, which seem to provide decent structure on the price chart. So that's down at 131.25. We can also reference some fib levels as well, but we have to go pretty much all the way back to the start of the move, which was in January 2021. The 38.2% fib level of that entire move comes in at 125.33. Just while on the theme of the Japanese yen, just take a look at Aussie quickly. That broke out of this triangle pattern a couple of weeks ago. Looked as though it's going to continue moving higher and make a fresh challenge of these highs that we saw on the 8th of June. But prices look to be rolling over. A big engulfing candle formed yesterday and further selling being seen on that today. And finally, Euro yen. We saw the break of trend here. That was back in the early part of July. We saw a nice retest of the underside of that broken trend line and a really strong rejection. Prices have continued to move lower. We've now taken out that low from the 8th of July and looking to head lower. Next price objectives on the downside are around 134.12 to 133.15. So yeah, some interesting moves in the FX space. Let's move it on to indices now. And as we mentioned, they had a pretty good day yesterday. The ASX 200, we mentioned this resistance level here, or this band of resistance around 6,900. Well, we sailed through that yesterday without really any problems whatsoever. We remain above it. Maybe we'll see a little bit of a retest of that before further upside. So that looks quite bullish for now. If we take a look at the DAX, we saw a decent move higher yesterday. So we completed a very small double bottom here, broke out through it. We've seen a nice pullback to retest it, and prices are now moving to the upside. So really nice technical setup there, actually. The measured move of this double bottom, the first objective is 13,663. So I wouldn't be surprised if we see that within the next few trading sessions. So that's looking pretty good. And then maybe we can start thinking about prices moving within this range for a period. So the upper end of that range comes in around 14,695 to 14,810. So decent upside potential in that maybe over the short to medium term. Nasdaq now. So we saw the breakout of the triangle. We saw a pullback to retest it, and a really strong move to the upside following that. So that's really nice technical. How that's played out on a technical basis. We're now into resistance here at 12,941. This is the previous swing high from the 3rd of July. Now we need to get above this, I think, and if we do, then obviously there's a fair amount of white space on the chart for that to move into, which would be quite welcome indeed for the beaten up bulls on the US stocks. But one thing I would like to bring to the attention of those involved in this market is the weekly chart here on the Nasdaq, because this is a really large rounded top pattern. Now what we're seeing is actually a retest of the neckline of this top pattern. So it's a really strong level and a pivotal level, I think, that needs to be overcome if we are to expect higher prices on the Nasdaq. The other thing I want to add to this chart is the fixed range volume profile. So this just gives you an indication of where the participation has been throughout this entire period. So this is the pandemic lows to the highs that we posted in November last year. And what we can see here, this red line is the volume point of control. So this is where most people who participated throughout this entire rally are placed in this particular market, and that can act as a pretty stiff resistance level. So we're pretty much into that, as well as the neckline of this head and shoulders top. So a really big level that needs to be taken down here from the bulls to give it any chance really of moving to the upside. So pretty crucial stuff, I think, on that market at the moment. Let's look at the S&P. Really nice candle this week, as you can see on the weekly. Let's just take a look at the daily. Earlier this week, we sort of highlighted this level as where we thought prices could get to, and they've pretty much achieved that to the tick, which is nice to see. So some stiff resistance here between 4107 to 4136. So we need to see prices really get through this band of resistance here, and if they do, then we'll be highlighting this 61.8% fib level at 42.54 as the next level to target on the upside. So very much on the front foot for equities. And I'm expecting Jamie's going to show us some pretty nice charts on the stock side of things as well.
Yeah, I can actually do that today, which is it's nice after all the. It seems to be we've just been showing negative looking charts for the last 3 months or so, but it's nice to finally be getting a bit of a turnaround. But we'll start off. We're not going to look at turnaround. We're going to look at the biggest loser of the day, and that is this BHC down 41.24%. This comes after the gap down we saw on earnings back in May, and just, I mean, more of the same really. And this is a pharmaceutical company which is bad for me. Looking at why this happened, Bausch and Lomb Corporation announced they have entered into a strategic agreement to address unmet needs in glaucoma. Not really sure what that means. I'm sure someone out there will.
We better keep an eye on that.
There we go. There we go. Still at the end of the week, still got the jokes coming. You'd love to see it. SkyX platforms had a really nice 68.59% move yesterday, and quite a nice technical pattern played out. This bullish flag that we saw here, we saw the impulsive move off the lows here, a bit of a correction with some narrow trading days in the form of a flag, and then that really pushed on yesterday. And if we bring up the volume here, you can see the volume really picked up on that rally. So if we have a quick look at why that happened, what are we, SkyX? benchmark started Skyx platforms with a buy stop rating and a $15 price target. This was on the 28th. So this was yesterday. So yeah, happy days. A nice move. Technical analysis playing out. You'd love to see it. Let's have a look at the heat map for the day. There were a few earnings out yesterday. So the Amazon and the Apple ones might be a little bit different on the after hours trading. So we'll look at that in a sec. But most notably for me, Meta Platforms, I think that had earnings too. That was down 5%, so we'll dive into that in a bit. Comcast here was down 9%. I think that was on earnings too. Pfizer was down a bit on earnings. But everything else, I mean, it was a pretty solid day across the board, you can see. And it has been for the last 2 trading days. It's been a lot of green. But will we get some more red today with the key resistance that Joe was outlining for us? But for now, we'll dive into how yesterday traded. So Apple had earnings out. If we check that on a 4-hour chart, you can see we had a nice move and we ended up closing at 162. So we'll bring that back to a daily 162. Let's bring out the extended line. We closed about, oh, the extended line was a bad choice. We closed about here where this blue line is, not showing very well, but a clear, looks like we hit on earnings. We did. Slight surprise there on the upside, but we've had a really nice move on Apple actually from the lows we saw in the middle of June. We've come up now 26% from where we closed yesterday, so that's been a really nice move with not too much kind of selling pressure. It's been a little bit here and there, but not a real influx of sellers coming in, so that's been a nice move for Amazon. Apple, now we're on to Amazon, which had earnings as well. You see a little red symbol down here. It looks like it was a pretty big miss. We can perhaps have a look at that in a sec, but if you look at the 4-hour chart, the market didn't really care if it was a miss because it's up to $138.94. So again, let's have a look where that is on the bigger chart. See if I can find a better tool for job. What was it? I've already forgotten. 138? I think it was. If that's the case, we're right up in this previous level here. Was it? Am I being silly? I'm not being silly. It really did climb that much. So a really nice move there after hours for those that like Amazon. But yeah, right into this previous support, which would act as a resistance level. We might be getting a gap fill from this gap on the 28th, which is actually the last earnings we had, which gapped down so heavily. So a really interesting move there on Amazon. Percentage wise, from where it closed at 9 o'clock, we're up 13% on that earnings. So again, a nice move, but off the back of a miss. So we might have to drill into that a bit more and see, go into a bit more detail on what that potentially was. Another earnings report here, CMC SA. It's too many letters. I don't like that. But this is Comcast, as I said, down 9.13%, gap down pretty severely. Not particularly nice looking chart, honestly. Don't love what I'm seeing there. Checking on Coinbase, approaching this previous resistance we've got identified at 63.55 will be a pretty key level. If we break above that, you know, we're aiming back for these highs here. But if the sellers come in, it looks like the sellers are really in control of this again, and it could be a bit of a lightning bolt action to the downside, which wouldn't be so great for those that like Coinbase. Etsy, I think when the earnings come out on Etsy, it came out on 27th after close. We had a slight gap up on the earnings, but it was actually the follow-through day after, which provided the bigger move and the bigger volume as well. So that was up almost 10% yesterday. So a really nice move for Etsy. Perhaps we're getting a bottoming pattern here, or perhaps it's just a bit of a rally. You never really know. You've just got to follow price and react to it when it comes. Look at a couple more. We want to look at Meta Platforms, which had earnings yesterday. This looked like a slight miss, but the market didn't like this as much as it liked Amazon. Posting this, I guess, a bit of a bullish hammer here at the support level, but this comes off the back of a gap down. I mean, you can see this range we've got identified here from the 61.8% fib, which is of the whole. We zoom out to a weekly chart and zoom out as far as we can from the whole move down from the lows of, I think that's right, yeah, the lows of August 2012 or September 2012 to the all-time highs, and this to 61.8% fib level of that move. So it's really trying to prop up the market here. We'll see what follow through we get today. I think if we get a weekly close below this level, if we bring it back to a weekly, if we close somewhere down here, That to me spells the next leg of selling. I think we identified this shooting star type candle last week on Meta, which looked pretty bearish in the follow through as well. So we will see where that ends up on the week. I want to take a quick look at a few more. Moderna coming back down into this previous resistance level, which is acting as support now. Again, a bit of a bullish hammer. We've got earnings coming up on the 3rd of August, which is next Wednesday. Yep, next Wednesday. But again, quite a nice pattern. You could also potentially see this as there we go, parallel channel, a bit of a flag type formation you've got here. It's not perfect, but you know, something like that. We've had this nice move up and a bit of a retracement here into this level, so it could be potentially a nice area to get long if that's your style of trading. Microsoft, we know that earnings came out for this the other day, had a really nice gap up on earnings, and then the follow through yesterday, hitting that red line I had there perfectly. I think we drew that on yesterday as a resistance. That's where the sellers came in. Let's see how this finishes the week, because on a weekly chart, yeah, I thought this is going to look really, really nice. Closing above all these previous weeks here, about the last month and a half of trading. And if we even get above this level, that would be even better. So we'll see if it can push on today. It does feel a little bit overextended at this point, but you know, it could keep well moving up. But with the Nasdaq at resistance, I would be cautious about that. This is Pfizer's earnings. I mean, it's just a perfect doji's closed right at the day's open pretty much. Did actually looks like it was a beat from Pfizer, but mixed feeling by the market. A doji which covers most of the prior couple of weeks trading action. So I mean, it's in the middle of this channel. It's closed in the middle of the day. I mean, this could go anywhere at this stage, so I'd just be keeping an eye on the key levels that I've got drawn out here. Finishing a couple more. Plug had a 25% move, and I'm not really sure what that was off the back of. Let's have a quick look, see if there's anything here about it. Solar stock surging on Thursday after US legislators announced an agreement on a climate spending bill that includes $369 billion for clean energy provisions. So it looks like a lot of these stocks like Plug, Sunrun, Sun Power, a lot of Sun stuff, Sun Nova, did really well off the back of that news, and a huge gap up and huge volume too. So maybe Plug is going to be moving in the right direction for a little bit now. I think that's all I want to cover today. Is it? I'll quickly finish on Twitter. Twitter, not completely convinced by this break we've had here. The volume's really, really low, but we did close above all these wicks, which we've been keeping an eye on for the last week or so. But the volume's still quite low, so I'm not completely convinced, as I say. But one to keep an eye on. Technically, that's starting to look a bit better though on Twitter. It's been a bit weird with these gaps downs and gaps ups, and it's all Elon Musk doing his weird tweeting and buying and getting sued, and there's a lot going on there outside of the chart, so be careful of all that stuff if you're trading Twitter. We'll call it a day though there. I think, yeah, it's an important end to this week. Key levels on some of the indices, so we will see if the buying power can continue. I think, you know, it's been a couple of days in a row of pretty positive action. It wouldn't surprise me if it was met with a bit of selling today, but let's wait and see.
Yeah, cool. All right, Jamie, thank you very much. So in terms of the corporate stuff, just to quickly run through that. So there are no major earnings scheduled for today, certainly none that we would typically cover on the video each day. As we said yesterday, there's a few numbers out. Amazon coming under, Apple coming above, and Intel actually was pretty poor indeed, coming in with a negative EPS of 0.11, which was a minus 120% surprise on what was expected. So I think in the after hours, there was quite a significant move on that to the downside, 7 or 8% from what I read. So be careful if you have any exposure there. So moving on to the next phase of the video, let's talk about the gun to the head challenge. So this is where each of us come up with a trade idea live on the video. Just a bit of fun, just trying to see where we think, you know, there could be some significant price movement throughout today. Each of the ideas that we publish have a stop and a target. All the ideas are placed at market, and these ideas expire at 9 p.m. or when the stops or the targets are reached. If anybody wants to check out previous ideas, please feel free to do so. They are on our TradingView profile, which is signal_center. And as you can see here, there were 3 ideas yesterday, and not much to speak of in terms of what Steve and I did. I was selling Ethereum into resistance, but that didn't play out. stopped out on that. Steve was buying crude oil, and he was stopped out on that, sadly, after an initial move higher, which was quite nice. But Jamie managed to save the day and spare our blushes. He was selling Euro Swiss into this resistance here. Really nice technical setup there. And that played out really nicely. So at 9 o'clock, you were 2R onside, Jamie, which covered, Stephen, my mess. So thank you very much for that.
It's all good. It's about time I actually contributed to this game in a positive way. So I'm glad I could do it yesterday.
Nice. Okay. So 3 fresh ideas to end the week. Obviously, there is going to be a fair amount of positioning going on, so it could be pretty choppy out there. And as we said, we're into some pretty key levels in a number of markets. So who wants to step up first and take a look? Steve, I think you were giving it away early what you were looking at.
Yeah,
Is it
yeah.
still looking good?
Well, yeah. I mean, everyone's jumping on the bandwagon now, aren't they? So yeah, I'm looking at this in Bitcoin, looking like it's topping out on a short-term basis. The stop would be above the previous swing high, or the swing high we've just seen in the last couple of hours. Could probably be a little bit more aggressive with it. I can't really see it going all the way down to where I'd love it to go down to, but I've got to get some risk reward in there that is at least 2 to 1. So that's what that is. Or I can, yeah, whoever jumped in early has missed out on this. 3 2. The entry price is 23,932. We'll give it a 500 point stop and a 15,000 point. Oh, 15,000? 1,500, 500 point stop, 1,500 point target, which should, yeah, that's right, give us 3 to 1 risk reward. Well, the stop isn't quite where it should be, is it? So I have to make the stop a little bit more. Let's do a 600 point stop, which takes us above that swing high, and an 1,800 point target. It's still got a 3 to 1 risk reward. That's what I'm going for today. Selling Bitcoin at these levels, targeting a move to 22,132. The stop is at 24,532. Got there in the end.
Lovely. Good luck, Steve.
Good luck.
Jamie, or shall I go? What do you want to do?
Yeah, go for it, Joe. You can go.
All right, cool. So NASDAQ for me, primarily because what I'm seeing on the weekly chart, just go back to that to refresh the memory. We've got the fixed volume range profile on the chart here. This entire move higher that has played out over the last couple of years. We've got a volume point of control in red. We're in at that level at the minute. We're also retesting the reverse side of the 38.2% fib level. We've also got a swing high from the 2nd of June to contend with as well. So very much on the front foot at the moment, but I think we may see things stall a little bit here. So I'm going to set it at a current price of 12,888. And I'm going to have a stop loss at 13,193. The target that I initially had doesn't give me enough risk reward, so I'm going to move that down to there, which is 12,110. Just looks to be a reasonable cluster of support in there that we can target. So that gives me a risk reward ratio of 2.55 to 1 selling NASDAQ today.
Very nice.
Over to you, Jamie.
Thanks, Joe. Steve's kind of ruined my fun a little bit with his Bitcoin. I had my first scan before we started the podcast today, and I thought this is quite similar to what I was looking at yesterday for Euro Swiss. We've got these rejection levels, and I thought, this one's finally looking like a bit of a shooting star. It looks great, but Steve beat me to it, and I'm going to concede it sadly. But good luck. I hope it doesn't stop out. But I'm taking a look at the euro against the US dollar. And what I'm seeing here, we're running into a zone with a lot of selling pressure. I know these red lines are a bit excessive, but it highlights the different areas where prices touched and then reacted quite negatively straight away. So we've got this level, which we've actually already hit and had a bit of selling pressure, but above that we've got this level here, and the top wick we see is there. So For me, I can get some quite decent risk reward knowing that there's resistance above to potentially cap the gains if it does start creeping higher, and quite a well-defined range as well for a target profit level. So we're going to have a go at selling this at current price. So that would be at 10241. There we go. We're going to have, like I say, the stop pretty tight, just above these recent highs here at what are we looking at? 10281, and our profit level right at these lows at 10114. So that gives us a pretty nice 3.17 risk reward. So hoping for, I guess that slightly correlates with what you've done, Joe. So perhaps we'll both be on side and we'll have a really nice end to the week.
That would be very nice, wouldn't it? Okay, those ideas are being published up to TradingView right now, so if anybody wants to follow the progress of them, please feel free to do so. In terms of what's out for the rest of the session, we've got a couple of data points to keep an eye out for. At 10 o'clock this morning, we've got the Eurozone consumer prices, so that'll be an interesting read on inflation in the Eurozone, and may impact where the ECB going to go with interest rates at the next meeting, or certainly in the next speeches that they have, and the sort of rhetoric that they use. And then at 1:30 UK time, we've got US PCE prices index as well. So not necessarily a major market mover, but worth noting it could have an impact on prices later on this afternoon. Then that's it for the month. We move into August as of Monday, and we kick off the month with the latest ISM manufacturing index reading in the States. Then we've got policy decisions from Australia and England on the 2nd and the 4th. Then we've got non-farm payrolls and the Canadian employment report on the 5th. So some interesting stuff to look forward to next week as well. Okay, that's it. Anything else to add, gents?
No, all good. Have a good weekend, everyone. And yeah, get ready for next week.
Absolutely, yes. Thanks for watching, everyone, and we'll be back on Monday. Take care.
Cheers.